Techpoint Africa says Nigerian startups raised $28.35 million in the second quarter of the year. Meanwhile, the African Private Equity and Venture Capital Association say that financial services and information technology have been the two of the major sectors driving venture capital activity in Africa between 2014 and 2019. Joining me to assess the performance of the tech startup ecosystem in 2020 is Maurizio Caio. He is the founder and managing partner at TLCOM. We also have Ife Oyedele, is a co-founder and chief growth officer at Kobo 360. And last but not the least is Jake Bright, is the Techcrunch contributor and co-author of The Next Africa. Thank you so much, my guests today, gentlemen, for joining me on the show. And let me start with Maurizio here. And as we assess the investment space, I'd like us to take a step back and look at the funding rounds we've seen so far in 2020. And for you, what sticks out in what we saw this year?
I think that, first of all, I don't think this should be remembered as the year of COVID. This is one more year in the evolution of Nigerian venture capital from being a small phenomenon to being a global phenomenon. I think the thing that stick out are probably two. One is that we're going beyond fintech. It's very clear that technology can go beyond fintech. I think Ife here is the proof that logistics is one of the verticals that can benefit more from technology, but education and healthcare and so many other sectors are ready for tech. The other point is that we've started to see the returns coming out of these efforts. It's still a very young ecosystem, but we're seeing great exits happening with Paystack, with BPO, with others. And so I think that this ecosystem of technology and venture capital in Nigeria and in Africa more in general is becoming more mature. This is the message from 2020. This is for real and beyond fintech.
All right, Ife, for you, what sticks out in this year?
Yeah, so it's been a very, very interesting year. As you know, in business, they say never waste a crisis. And we don't see this as a good crisis, but we see a lot of opportunities, as Maurizio mentioned, beyond fintech in the agri-tech space, in short tech and health tech. So the idea of never wasting a good crisis goes not just on the startup side, but also in venture capital side. So I think there's still a lot of positivity. I think a lot of people, a lot of venture capitalists still see Africa as a positive ecosystem for investment. And we think that in the next coming quarters, we're going to see a lot of partnerships and collaborations, not just from the VC and private equity space, but even with large enterprises and multinationals wanting to step into that digital economy, that digital age, partnering with these young, hungry and very active entrepreneurs trying to change Africa and improve the ecosystem using technology.
All right, Jake, for you, looking at the kind of year that we've seen, I'd like you to speak on the figures we're looking at on the amount that was raised so far by startups and the funding rounds, and why we're seeing some disparity between a lot of people who track these figures.
Well, yeah, there are basically three main sources that we follow that have been attempting to lock down venture capital numbers for Africa. And that's WeTracker, Disrupt Africa, and then Partech, the fund does some numbers. The thing about those numbers is that there are some big gaps. Depending on which study you find, you see anywhere from half a billion to $1 billion to over $1 billion that has been said to be raised in the ecosystem. When you look at what's leading to those gaps, it really gets down to definitions of how each of those entities tracks venture capital. But one thing I will say is that, there have been twofold, threefold increases no matter which study you follow. And the data we have now is much improved over what you would see maybe 5 or 7 years ago, which was very little data at all. So it's definitely an upgrade.
All right, now let me get back to Maurizio. And yeah, definitely you mentioned the COVID-19 pandemic and what we see play out. But I'd like to know how it influenced the decision making for VCs this year.
Yeah, it's contingent, not structural, the way we summarize it. From one side, you should think that venture capital decision making is based on what you expect to happen over the next 5 to 10 years. And so a pandemic that is very intense and impacts the world for a couple of years is certainly important, but does not affect the upside potential of companies that look to conquer a market over the next 5 to 10 years. It's been a useful accelerator of sort of the Darwinian selection that is very healthy in venture capital. So the weak companies have died more quickly, the strong companies have grown more strongly. And there's been an impact. And I think it's been an opportunity for entrepreneurs and venture capitalists to work together to deal with it. I think some companies have been hit and have used their time to build the springboard for re-jumping up, bouncing back when the economy reopened. Other companies have benefited. So I think overall it's a good crisis, as Ife was mentioning, and it has not impacted that much. This has been the busiest year for us. We've made 5 new investments despite COVID. So I would say let's think about it and let's incorporate the awareness of what's happening, but let's not deal with it as a fundamental event on the history of African venture capital.
All right, if let me speak to you because I understand that your company also is a logistics company, and definitely you can speak to the impact we've seen from COVID this year. But I'd like you to have more on the lessons that we're learning from the COVID-19 pandemic and what the tech ecosystem can take from a year like this.
Yes, so thank you for that. So for us, we saw a little bit of a slowdown, about 25% initially at the beginning of the lockdown, at the virus, the early stages of the virus. But we were able to come out of that, and we've actually grown significantly, over 70% in Q3 of the year, and we are seeing more growth coming. This is also because we learned from the crisis by bootstrapping, by focusing on our existing markets, and also just maintaining that relationship with our clients in moving towards a digital experience. You're seeing a lot of multinationals who have done the business is the traditional way, now embracing technology, seeing the need to optimize and create more efficient methods of carrying out their daily operations, and that is the future going forward. So for us, that is our mantle. We're stepping into the new year and into the next 3 years with that idea in the forefront, where technology is the driver towards sustainability, towards being sort of crisis-proof in the coming years, because we don't know how long the situation is going to be as it is, but we have to be prepared, and that's the same advice we are seeing in the tech ecosystem. One of the other key things is that the collaboration, as I mentioned. We're seeing multinationals now willing to partner with startups to create more innovative ideas, and we're seeking more partnerships, not just in the private sector, but in the public sector space, with regulators and financial bodies, thinking outside the box to come up with more easier, more efficient methods for creating a better space that allows a fostering of these startups and these entrepreneurs in this environment. So that is what we are driving towards in the new year.
All right, then, Jake, we've seen the impact of the pandemic across board, but there were some winners and losers in all of this. For you, though, which ones are the sectors to watch, and which do you think we could recover stronger in 2021?
Well, I think it's interesting to see how resilient the African tech ecosystem has been given the downturn, and maybe that's a result of just how much leaner some of these companies have been able to operate and how much more capital efficient they are. But I would echo some of what Maurizio said and Ife, is that I think the winner is the whole ecosystem, and two of the big events, or three of the big events I think that show that is really the Paystack acquisition by Stripe. Was really something that will be marked on the timeline for African tech, as well as the acquisition of DPO, and then also you had Jeff Bezos that invested $30 million in this African fintech company, Chippercash. And it's not as if the ecosystem didn't exist before these big names came in. People like Maurizio and Ife have been investing and working away in the ecosystem for a while. But when these big names come in and put hundreds of millions of dollars in African tech startups, it definitely gets the attention of the rest of the world's tech ecosystem. And the other thing I would say is it starts an era of acquisitions and liquidity events, which the IPO market's scarce. in the African tech ecosystem and probably will be for a while. And these acquisitions are starting to mint founders who are going to go on and create their own funds and do other things. So, those are the high marks that I would see.
All right, let's get into opportunities we're seeing here. Now, Maurizio, I'd like you to speak to what we're seeing play out in the fintech space, because we're seeing quite a lot of attention in that regard from investors. And I'd like you to speak on the prospects we're seeing for Africa's fintech space.
Yeah, it's clearly been, fintech has been the general rehearsal of what technology can do for Africa's GDP. It's clearly the easiest sector to digitize. There's no goods to move around, as Ife knows very well. There's a lot of challenges in doing that. There's not retail points. It's the easier piece to do. And it's happening and it's great. Some of the segments in that piece can be commoditized with risk of price pressure and so relative attractivity from venture capital investors. But there's other parts that there's so many. There's remittances, there's gateways, you can see InterSwitch, you can see Paystack, you can see a lot of different pieces there. I would say that when we look at fintech in the coming year and in the future, we'll see less pure fintech players and more players that do fintech without being financial services companies. So Kobo finances drivers, Twiga food finances farmers and street vendors, AutoCheck finances car dealers. So I think that fintech will become more pervasive, will not be anymore the domain of the new banks, the new payment companies, the new telcos. It will be more of a tool for many players to expand their business definition and capture more value going forward.
If you're just joining us, we'll continue our conversation on the tech ecosystem, and we'll find out how they can position going into next year. And joining me, my guests have been Maurizio Caio, is the founder and managing partner at TLCOM. We also have Ife Oyedele, the co-founder and chief growth officer at Kobo 360, and Jake Bright, who is the Techcrunch contributor and co-author of The Next Africa. Before we left off, Maurizio was just telling us about the opportunities in the fintech space. But I'd like Ife now to get into it and also look at some of the opportunities other sectors provide for the tech ecosystem.
Yes, so of course, fintech is the key ingredient to successful startups. It is very, very important that we're able to move money easily for a company like Kobo, which is a logistics company, but operating in 7 different countries in Africa. One of the key things about our business is ensuring that we're able to move finances and moving funds across these markets, across borders, efficiently and smoothly. And that is why we had to start sort of building our own financial services operations that supports our drivers, supports our transporters, and supports our clients. So one of the key drivers to that is looking towards the African Continental Free Trade Agreement and how we can use blockchain technology to validate transactions, validate contracts, and ensure that payments are verified and they can move swiftly across these borders to ensure that trade is moving around the clock and there's no service interruption to the large enterprises that we service across the continent. And so this embedded fintech growth that we're seeing in the continent is going to support the scaling of agri-tech businesses, the health tech, insurtech, and support ambitious entrepreneurs and founders who see their solutions working not just in Nigeria, but outside the country to other markets, even beyond the continent.
All right, there's still quite a lot there. Let me bring Jake into the conversation now. Jake, we've seen quite a lot has been said about the opportunity in the space. For you, as someone who tracks the activity on the region, so keenly, I'd like you to speak to some areas where you're seeing green shoots play out and that could lead to great opportunities.
Well, look, I think to echo what's been said so far, fintech is obviously king. I think it will be, and it'll continue to play out in various forms for years to come. There's just so much there. You're looking at, when you look at Nigeria and broader Africa, you're looking at really one of the largest unbanked or underbanked populations in the world still. So there are just so many opportunities to serve. But I think that one thing to consider is that across the major tech hubs and African economies, that it's just wide open in that you have these formalizing economies, you have large numbers of people that are coming online, you have fast device penetration, and you have all this friction and inefficiency in so many of these economies. So any sector where there's a possibility to connect mobile and dynamic founders who are creating platforms and solutions to do things more efficiently, deliver goods and services digitally, there's a huge opportunity there, from ag tech to EDU tech to insure tech, fintech, e-commerce. There are just so many opportunities on the continent across just any sector that has friction and inefficiency. There's a tech opportunity there.
All right, now, but looking at all the opportunity we're seeing, on the continent, like all of you rightly mentioned, I'd like us to speak a little on the operating environment and the regulatory risk that could portend for the startups. Let me hear Maurizio's comments.
Yeah, so one way to deal with regulatory constraint is to avoid them, right? So when you look at different sectors, you score them less attractive when there's a heavy play from the regulatory environment. In general, our sense is that the regulatory environment is improving, is becoming more startup friendly, but in some sectors is still a very relevant burden. So if you think about the distribution of value-added services on behalf of telcos, every time you have a company that uses the telco, MTN or Airtel or others to distribute their software services, they need a specific approval from the regulator. So when you do all the effort of partnering with the big corporates, of finally having your product as a startup certified as good enough to be distributed by these telcos, then that's not the end of the process. You still need to go to the regulator and wait for a few weeks or months for them to assess that this is fine. So I think in general, it's a long process. It's improving, but it's still a constraint. And the attractiveness of startups is higher when they are not playing in regulated environments.
Right, Ife, your thoughts on the regulatory risk we're seeing, and also how the operating environment is either hindering or supporting businesses?
Yes, so I agree with Maurizio that there's been an improvement in the regulatory space, but there's a lot of catching up that needs to be done. Regulators can kill businesses, unfortunately, and you see a lot of young entrepreneurs trying to do make some amazing strides in their business, but they feel like they can't cross through certain bottlenecks or hurdles. But even when you're pushing through, these regulators can come for you. So I think it's high time the regulators understand the tech ecosystem, understand entrepreneurship, understand that it's the driver of the future in a continent where there's a lot of young people that are trying to make something of themselves, make something of their communities, and figure out a way to work hand in hand to ensure that they are creating policies and processes that allow their businesses to scale, and take their time through that process. It doesn't have to be a one-stop shop, drop all the walls approach, but again, that hand-in-hand synchronized approach with industries, whether it's in the fintech space, in logistics, education, all of these industries you are seeing ambitious young people trying to make strides, but are scared of regulators pushing the buttons. So we're calling on the public sector, on the regulatory bodies to look towards empowering this sector of entrepreneurs, these industries, to make something of the next decade in that space.
All right, Jake, I'd like to get your thoughts on the regulatory risk, because we saw what played out in Nigeria earlier in the year when after a lot of the ride-hailing startups had raised some funding from VCs, and then we saw that big hammer coming from the state government here.
I think one thing this highlights, getting to the conversation of trends in African tech is, I think it's important to note that one thing that we've noticed is that Nigeria has really become, the unofficial capital of startup formation and venture capital, and really the unofficial tech hub of the continent. So that's one trend I would note. And in Nigeria, getting to the topic of regulation and also what happened with the battle with regulating Okadas, is I think what you're seeing is, regulators in the tech sector in Nigeria in particular have kind of danced around each other, meaning I think the tech sector at large is kind of trying to avoid government and getting mired in regulation. I think government has tried to take credit when they can make talking points for the tech sector, but not really get that directly involved. And what you saw in 2020 is that, the tech sector in Nigeria and the government realized that, for better or for worse, they're going to have to engage each other in one way. And I think they're learning to do that. I think that the question, as Ife says, is how can you do that appropriately? How can you apply smart regulation that, maybe is needed with things like, motorcycle taxis around Lagos, but at the same time, you don't want to stifle the growth and the upward swing of these entrepreneurs and startups.
All right, and thank you so much for your submission. Unfortunately, that's all the time we have, but I was looking forward to get into how we could address that relationship between investors and startups as they forge ahead. But probably it's a topic for another day. And thank you so much for your time, gentlemen. I've been speaking to Maurizio Caio, who is the founder and managing partner at TLCOM, also Ife Oyedele, the co-founder and chief growth officer at Kobo 360, and Jake Bright, who is a Techcrunch contributor and a co-author of The Next Africa.